Hey everybody, Tom Floyd here again, making another Mortgage Minute video. Hopefully this one will be a big help. We've kind of had a rash lately of people that's been having trouble with their loans because of something they've done during the process of the loan. So it's critically important that while you are getting your loan, that you keep your debts paid, every debt, no matter how small. The mortgage people don't care if a bill is only $50 versus a $500 car payment. If you're late on it, you're late on it, and that'll affect your loan possibly. The other thing we've had is people have actually changed jobs and not told us. Well, let me tell you right now, lenders, the day of your closing, they repull your credit and they call your employer. They're checking and double checking, and the day of closing, your credit better be the same as the day we took the application, because it can change, and I'll show you why. Right here is a rate sheet from one of our lenders, and all this right here is all the adjusters. One of the adjusters is for credit score, and let me show you the difference it makes. Right here, if your score is 740, they add a quarter of a point to the set rate on a given loan to value. If your score is 720 to 740, it adds a half. 700 adds a point. 680 adds 1 3/4 points. 660, 2.75, and 640, 3. Now what does that mean? I know you love this high-powered work. A point is 1% of the loan amount. So if you're looking at a loan of $200,000, 1 point is $2,000. So we go back to our chart here, that same person, if they're getting a $200,000 loan, they got a quarter of a point. For having a 700 score, it costs $1,500 more at closing. $1,500 for the difference between 740 and 700, and 700 is a good score. So this all factors into your rate. So you don't want your score to drop, because your points will go up, and that could really happen. They will double check your credit at closing. So be very careful when you apply for your loan that you keep everything the same, and that's also why it's critical to keep your credit high. Keep it high, because these scores, if you're over 740, you're golden, but if you're below that, you're not going to get the same interest rates. And this is something that most people don't know, but it's definitely true, and it's true with all of our lenders. Hopefully someday that'll change. I think they ought to either just approve you or don't approve you, but this is what's called risk-based pricing, that the lower your credit score is, they consider you a higher risk, and therefore you have to pay more to get the same rate. Now we can do all kind of adjusters from the rate sheet. If you don't want to pay three points, you can move up and down the interest rate and get a higher interest rate instead of paying points. But that's your choice as a customer. You can either pay points or you can take a higher rate if your credit score is not as high. My wish for you is that your score is over 740, and I'll do whatever I can to help you get there. So I hope that helps any. Watch your credit. It's very important.